Hey everybody, this is Jim at SP500chart.com. It's about 4:50 on July 17th, 2014. Had a rough day in the markets today, and I think we got spooked partially by that Malaysian jetliner being shot down over the Ukraine. But regardless, the chart is the chart, and we've talked about trend lines. Well, let's talk about it in a second, after I remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, what I was getting ready to say is, as we look at this hodgepodge of these trend lines, some short term, some intermediate term, some long term. One thing that's important to keep in mind, and we've talked about it in the past, but haven't really for a while, and that is the fact that these are not made out of case-hardened steel. Okay? These lines, these trend lines are really, think of them as influences, not barriers, because every trend line so far that's been known to man can be broken. And the question is, what does it take to break it? In some situations, it takes very little. In some situations, you have a trend line where you think you're in a good position and you actually get good news and it breaks. But that's because the stock at that point is technically weak. So, the higher the markets go, by the way, that movement alone creates some degree of technical weakness. And the lower markets go, even though even in a bearish market, as things get lower and lower and lower, the technicals automatically begin to improve just by the simple fact that that selling pressure cannot last forever. Conversely, buying pressure cannot last forever. So, here we've got a series of trend lines on this chart that have served pretty well. For example, we had this line right here. Goes all the way back to the breakout over this neckline, which, by the way, again, I remind you, we had a target of 1990. That target may be in jeopardy now, at least for the short term. But here we've had this trend line, support, support, support. It broke. We actually got over it again. Looked like we wanted to recover back above this. But today, we now broke out under this line by a distance of 76, 56, 20 points. So for the first time since this line has been on the chart, we are now technically significantly underneath it. So I think we have to say, even though we kind of meandered in and around this line for the past 5 or 6 days, I think you now have to say decisively this line has broken, and it likely will be resistance from this day forward. Just like this line, once it broke, this line is resistance probably for all of eternity. Because it's going up at such a straight pace, there's just no way the S&P can catch up to that line. This line right here. This line right here. Extended on out for the next millennium, the S&P will never touch that line again. Well, if it touches it, it better do it tomorrow, and if it does, it will be a day in which the S&P goes up about 70 points. In other words, ain't going to happen. Now, this line isn't quite as steep as either this one or this one, but I think it's steep enough to say that both this and this, but more importantly, this orange line, we should now be looking at this line as having solidly flipped to resistance. Now, I mentioned in the last video that there was a bearish scenario to this chart, and that scenario was based upon the possibility that we may be dealing with a head and shoulders top. And that is right where we rest today. We stopped, we ended the day right at the neckline of what could be confirmed with a break of this line as a head and shoulders pattern. So we need to keep an eye on that. If that breakdown does occur tomorrow, then we would be able to measure the target because we know the height of this pattern. There it is. We just measured the height. And if we were to break down, let's say, pretty quickly tomorrow, then we would have a target of about 1923. Okay, so that's about 34 points lower than where we are right now. That's only 1% and 2/3 or 1% and 3/4. So it's not really a major deal. But one thing I want to show you is that, you know, we talk about and we did, let me adjust this line a little bit to make sure I get this just right. We talked a while back about that's interesting. I wanted to hold on. We've got this trend line that is this bottom back in February and this bottom in middle of April. If we extend that up, that's very close to where that target is if this neckline breaks down. So I think there's a good chance that we could, if we do see this pattern break down, I think there's a good chance that we could see this line come into play and give us some support. Now, I mentioned too a while back that that in this smaller inverted head and shoulders pattern, this one right here, that there is a trading method where you go long as soon as you tag either this line or the neckline or the 40% retracement from the end of the breakout move. And guys, this line is very close to where we are right now. But even if this breaks and this little head and shoulders top plays out as a head and shoulders top, our 40% retracement line is still down here, and that is still a fairly likely spot to expect a bounce, and that is almost at right at about 1920. So if we do see this pattern break down, I would not start to get extremely concerned until we plowed down and started taking out this level or this level. So I guess what I'm saying is, even if this little top plays out as a top, there is nothing ominous about it. In fact, if you're looking for it, if you're looking for something, if you're looking for a definition in the chart of what ominous would be, I would say taking out this blue line. If we come down and take out this long-term support line that goes all the way back to 2009, our lows of October of 2011, our lows again in fall of 2012, and we haven't tagged this line in 1, 2, 3, 4, 5, 6, over a year and a half. It's been about 19 months since this blue line has gotten hit upon. Then that's where I would say, all right, now we can start putting on our radar the possibility that we're actually seeing a potential longer term top being formed. Finally, just one more line I'm going to put on this chart. I think I had it at one point, but maybe we erased it. I'm going to create a parallel line here, and we're going to extend this like so. This is yet another potential trend line where we could see a bounce. So that you can tell that this is a fairly complex chart now, and I sort of apologize for that, but the fact of the matter is it's a rather complex market right now. So essentially, if we break this neckline, we have a target of about a little bit over 1920, and then every line that is underneath here, here, and here, are reasons or spots which would be a likely place to see a reversal set in. So guys, I think we're just going to leave it at that. Watch this potential head and shoulders. If this line breaks, then I think our target is pretty easy to spot, and that is at about 1923 thereabouts. So there you have it. There's your video for July 17th, 2014. Let's see if we get a bounce. We could get a solid bounce here. But if we don't, and if we do break through, then I think we've got to be honest with ourselves and what we see in the chart and say the low 1920s at that point would be in the cards. But again, just to remind you, we've seen head and shoulders tops develop 4 or 5 times since the spring of 2009, yet the market continues to plow onward and upwards. So even if that pattern is confirmed, that's not reason to say to your friends the top is in. Not at all. There would have to be a lot more damage done to this chart, I think, before we could confirm a top. Now please understand, that doesn't mean that 1986 may not end up being the top for a major reversal. All I'm saying is right now the rest of the parts of the puzzle are not in place to be able to make that call. So it really depends upon what we see going forward. So let's watch this little pattern, watch our support lines underneath us, and see where there may be signs. If we do break down, see where we might get some signs of reversal. Hey guys, thanks for watching. And by the way, I apologize for that screwiness with the website yesterday. I couldn't get to the site either, so I have no idea what was going on. I think it's working fine now. Thanks for your patience. Thanks for your support. Take care.